But where this company really started to pique my interest is the shift in the business model and the fact that I think they are in the right place at the absolute right time. So we're going to talk about some deep value stocks here. A few different names I specifically want to talk about. Number one is going to be Warner Brothers Discovery. Number two is going to be a stock that I've been really honing in on, and I just recently added to the portfolio. And of course, Wall Street is now upgrading this stock. That's going to be Cisco Systems. So let's get into it. Now, Warner Brothers Discovery is definitely falling into a buy zone for me here, between $7 to $8. Currently, the stock is trading at $8.23, right in the wheelhouse. But there's a few things I specifically want to point out here. Number one, I did this analysis years ago. We could see where my projections were, and let's just see how accurate I was. I thought they would do roughly $31 billion in revenue, and I thought that they would have right around $47 billion in debt. They are doing $41 billion in revenue, and total debt is sitting at $43 billion. So they're doing a good job getting this debt load down, being super aggressive on getting that debt load down. And they're actually superseding where I thought revenue growth was going to be. So a couple things I want to highlight here. Number one, management is executing at a higher level than I projected. Now, if you follow the channel, guys, I always build some safety here. So I'm always usually low on the growth rates. And I'm usually, I knew management could execute here, but I always want to build just a little extra safety. So my growth rates are a little bit lower than normal, because if the company underperforms, I don't want to be whiplashed with price action, right? So I'm always building extra safety in my analysis here. Now, the other thing I need to point out is the amount of dilution taking place here, which I am factoring into my prices. So this is definitely falling in a buy zone for me here. And the fact that management is executing a little bit ahead of schedule is actually making me a little bit more bullish on this stock. When we check out forecasts, we have price targets as high as $36 and as low as $9. And I think somewhere between $7 to $8 makes a lot of sense for this stock. This is one of those interesting stocks where as the price keeps coming down and valuations keep contracting, going from enterprise value of $82 billion down to $59 billion of enterprise value, the company's actually getting more efficient. So this is one of those areas where we have to decide now, is the risk versus reward there for a company like Warner Brothers Discovery? And I think the way they're handling their debt load and the fact that, yes, we are factoring in dilution, that this could be an opportunity to buy, because I do think there's some upside here over the next 5 to 10 years. This is definitely a stock that could be trading by 2030 around $18 to $24 a share. And that would be a substantial move from where the price is from today. Now, of course, these are my projections and things could go wrong. And there's definitely some bias here with running analysis, so you always have to be careful with that. But I wanted to highlight this as one of the interesting stocks that I may be adding really soon here, because it is in my buy zone. Next up is Cisco Systems. Now, this one is very, very interesting to me. I basically have between a $35 to $44 price target. I definitely reached on this one, but let me explain why I did that. I want to point out something here. This is definitely a value technology stock. A lot of people think this could be a value trap. Now, over the 1 year, it's down roughly 4%. And over the last 5 years, the stock is actually down 15%, meaning it's pretty much been dead money here. But I want to point out that the forward PE ratio is sitting right around 13 times earnings. This is a company that does pay a nice 3.3% dividend, but where this company really started to pique my interest is the shift in the business model and the fact that I think they are in the right place at the absolute right time. First off, let's talk about the old Cisco, where it's a lot of hardware products. And with the build out of AI, I think Cisco can absolutely benefit and have some massive headwinds for building out AI hardware. That aside, that's what I'm paying 13 times earnings for. Where I think the market is discounting this company is the recent acquisitions, and there has been news as of today. They recently closed a deal with Splunk, which was fascinating to me. Yes, I think they overpaid, but when I think about what other companies they've acquired over the last couple of years, this is going to be a massive move for Cisco Systems. ISO Valiant, Splunk, Workgroup 2, and many, many more over the last 12 months. So silently, this company's been picking up very, very interesting businesses to add in cybersecurity and SaaS-like businesses into their model to build out more top-line revenue growth along with expanding margins. So this one was very, very interesting because you're essentially getting a hardware company that I think could excel in the economic cycle we're in, But now we're not factoring in all these acquisitions. So when you're buying Cisco at today's prices, basically in that $45 to $48 range where it's been trading, I believe you're getting a lot of these companies discounted here that they recently acquired. And this could absolutely grow top line revenue. So even if Cisco did nothing and just kind of kept their business model as is, it probably would still trade sideways and you'd collect a 3% dividend. But the fact that they have the opportunity to grow revenues at a higher pace and grow their earnings at a higher clip, should we get multiple expansion on top of that, could make this one a pretty strong compounder. Now we have price targets as low as $45 and as high as $76 a share. Now, along with the recent upgrades that Cisco has got, it seems that the news is finally getting out with this one. People are starting to catch on to what they're doing here. They're essentially shifting their business model to build out security for data centers and cloud in era of AI. So with the recent acquisition of Splunk and ISO Valiant, we're starting to see upgrades take place with Cisco. Now, here's the caveat. It's going to take a few quarters for all this to kind of start working together and for it to start showing on top line. So I have been building out a position. I did want to make this actually a substantial holding in my portfolio. But as of right now, I'm going to pump the brakes. Yes, I do think we're going to see a spike because of all this news coming out. But I also think they're probably going to disappoint on recent quarterly reports here because it's not really a part of their business quite yet. It's not running efficiently quite yet with all the acquisitions that they've made. With that being said, that's where I might accumulate some more if we get a break below $45. Pre-market, we can start seeing that there is some movement here with Cisco Systems. But with this one is pretty interesting because I think the risk versus reward is definitely more to the upside longer term, maybe a little bit more to the downside in the short term, the next 6 to 12 months, but the next 3 to 10 years, I think there's a huge opportunity here for Cisco Systems. So guys, I want to go over kind of some deep value stocks because you all know that I'm very heavy in T-bills. Roughly 40% of my portfolio is in T-bills, but I'm picking my spots to find undervalued assets that are getting overlooked. And that's kind of been my thesis for this year. Stay heavy in cash because I do think the end of the year to 2025 is going to be ugly, but that doesn't mean don't invest. That means pick your spots if you're an individual stock picker. Now, of course, on this channel, I always recommend just dollar cost averaging into broadly diversified index, especially if you don't have that time and management to be looking at individual stocks because it takes a lot of work. And you know what? You could be right and still it could turn out wrong. So wanted to give you guys those two stocks that I think are deep value opportunities, and we will see you in the next one.